Hey guys, Mike here. So obviously another big red day today in the market. Tech sold off like it stole something. But one thing we can confirm now, really, I think, and this is just my opinion, but let me know what you think, is this pattern and the plan that the Fed keeps rolling out, right? And it's like a script. And so, if you don't know what I'm talking about, I'm gonna show that to you and everything. And I'm gonna show you why they're doing it. And I think you need to understand how big of a deal it is and why the market's reacting like it is to the news that came out yesterday, and then from the Fed minutes that came out today at 2 o'clock. And if you didn't see it, here is what the lady said yesterday, and she's literally reading. She's been given her marching orders, by somebody. I'm going to go with Jerome Powell or somebody. Say, here, say this into the camera. And you'll see she's just reading right off a prompter here.
The committee will continue tightening monetary policy methodically through a series of interest rate increases and by starting to reduce the balance sheet at a rapid pace as soon as our May meeting. Given that the recovery has been considerably stronger and faster than in the previous cycle, I expect the balance sheet to shrink considerably more rapidly than in the previous recovery, with significantly larger caps in a much shorter period to phase in the maximum caps compared with 2017 to 19. That reduction in the balance sheet will contribute to monetary policy tightening over and above the expected increases in the policy rate reflected in market pricing and the committee's own projections.
And it's important to understand, this lady right here, she has been put up to be like the vice chairman or something like that, so kind of get promoted on the Fed board. And she is the most dovish, described as liberal person there is on the Fed. Okay, so this isn't normally her tone. So, and it's no accident they marched her out there to read that script. You can see her eyes, right? She's like, yeah, and we're going to roll off the balance sheet. Just read it right off to us. And she probably didn't even write that. And what happens? Market sells off. And you go, that's interesting. Why do they do that? Because they were kind of somewhat quiet about all that stuff. And that's interesting. But, you got to understand what no doubt is happening is this started back, the first time in November, December, right? When they started rolling out these Fed governors stuff and officials and start talking a little more hawkish. Say, hey, trying to brace the market. Go ahead. When I mean brace the market, I mean start selling off. The market needs to start going down, right? Which, of course, that's what happened in January, as you can see right here. And if you hadn't noticed, it's no secret they sold off, and then they got kind of quiet as the market was just tanking. They weren't throwing any fuel in the fire, so to speak. They were putting little nuggets out there to us, right? But Jerome Powell is really careful about how he talked about the balance sheet. And again, we're going to go off the data and all this stuff. And then what happens, right? Ends up, we get this rip-roaring rally out of nowhere. I mean, just absolutely tear your face off type of rally. And what happens? Start marching people out there. Not just this woman. They started marching people out here like last week, starting this, trying to throw more fuel on the fire to try to get the market to push back down. And so that is the playbook, because they're trying to almost in a way get the market to do their job for them. And there was this one guy I heard today, and you need to hear this guy. I'm going to let you hear a small excerpt of his interview. He was a Fed president up in New York. And so he knows, he's worked for the Fed. He knows exactly what the playbook is, because he's gone through this before. And so pay attention to this small clip of him. And this is what the Fed is trying to get the market to do.
The Fed has said pretty clearly, we need to tighten financial conditions to slow the economy down, to keep inflation in check. And so far, financial conditions really haven't tightened very much. The stock market is only 4% or so off its high. It's still up very sharply from where it was a couple of years ago. And bond yields, 2.5, 2.6% are still really low, especially when you adjust for inflation. So in my mind, the Fed hasn't really accomplished much yet. And if financial conditions don't cooperate with the Fed's going to have to do more until financial markets do cooperate.
And in other words, they need the valuation of the stock market to come down. They need the stock market to sell off, cool off. This is why you'll see people talking about how the Fed wants to crash the stock market, right? And especially once you saw the crypto market start rallying, that's when they really, if you look, that's when they start rolling those Fed officials out there, like get out there, because people are starting to risk on again. And if they're risk on, they're not going to the bond market. They want people to start going into the bond market, right? And as long as this stock market keeps moving up, or the crypto market was moving up, nobody's going into bonds. right? Nobody's going there. And they need, because the bond market's way bigger. Why else do they need people to start moving in the bond market? They're going to start rolling off their balance sheet. All those bonds and mortgage-backed securities they were buying, yeah, they're going to start rolling off, according to that lady, even faster, okay? And so who's the buyers, right? That's the big question. I even saw an interview, and I'll have to do some research on this, because I don't know a whole bunch about mortgage-backed securities, never, traded in them, none of that stuff, right? And so if you're into it, let me know. But, he was saying that the Fed has bought so many mortgage-backed securities, accumulated of such a wide chest of mortgage-backed securities, that you can have like the top 5 brokerages or companies out there that actually deal in this couldn't even touch with a 10-foot pole. They don't even, all combined don't have the money to even touch what the Fed has on their balance sheet, because we've gone from $4.5 trillion to $9 trillion in bonds and mortgage-backed security purchases. It's nuts, right? I mean, how big their balance sheet is right now. I think I forgot the percentage of GDP it is. Like, I think it's up to 40% of the U.S. GDP or something. It's just the numbers are staggering. And so I think that guy, he goes on to say that they're trying their best to let the market do the work for them. And so if the market does, then maybe they won't do as much. If monetary conditions start to tighten, then they won't have to do as much, right? Which, of course, means maybe we don't end up going into a recession later on, 2023, 2024, whatever year you want to pick. And I did that video yesterday for those who saw it or didn't see it. Go watch it. I'll link at the end to start a debate on this, right? Because who knows what they're going to do? Nobody can predict it. But the one thing I think we can see that's happening now, clear as day, if you've been paying attention, is the Fed, they really don't want to raise rates and run off this balance sheet really fast. They really don't. I think they know if they're forced into doing this, then absolutely they're going to end up running us right into a dang recession, because like the guy went on to say, when you've had, people talk about 94 being a soft landing, which means they didn't put us in a recession, inflation was nowhere near what it is right now, okay? And so, that's the problem with inflation being high as it is, and with the CPI data coming out next week for March, which should be the highest we've seen. And if that, by the way, if that report is lower, those numbers show lower in February, then I know those numbers are rigged. Because remember, when Russia invaded Ukraine, it was February 24th, only 4 days left in the month there. And that's when oil, natural gas, any commodity you can think of, fertilizer, everything just went through the roof. Okay, absolutely skyrocketing, went parabolic. And so, that kept going to about 15th, mid-March. So all those increased prices, the gas pumps, right? The gas just took off. That should be felt in this report coming up. And so that just push more pressure on them, right? And so they want the market to price in now this is the new thing. Well, we're going to run, right here, I'm sorry, I forgot to tell you guys. We're going to run 95 billion a month off when we actually start this, 60 billion in treasury securities, 35 billion in mortgage-backed bonds when they start to do this, right? And that's what they want the market to start to price in now. So now the market's trying to figure out, well, how much lower do we got to go to price that in, right? And then they're trying to price in, well, how many 0.50 basis point hikes are we going to have now? Because I think coming up in May, they've kind of already telegraphed they're going to do 0.25, I believe it is. But maybe they do 0.5%, who knows? And so, remember, it's that uncertainty that gets the market out of whack. Well, this was uncertainty. Like, whoa, we thought they were going to start running the balance sheet off at the end of the year, which they still could, right? I think they're just putting this out there to try to tell the market, if you want to start going all-time new highs again, you're going to force us, and prices aren't coming down. And I think they're sending messages to companies too, because remember, I always say this, just because shipping costs come down, all that stuff, guess what? You still got to get the companies that have baked these higher costs and who are planning on doing more price increases to their customers that are baked into this year. You got to get them to back off too. As their costs come down, they have to lower their prices for the customers and not try to price gouge us, right? And so it's no accident that used car prices came down as soon as GM and Ford called the dealerships out and put it out in the public eye, right? Because the dealerships like, uh-oh, we got caught. And those prices started to come down in the very next report, right, a month later. And so I think you're going to go through this. We got to go through that same period, talking about Walmart and all the grocery stores and the gas and oil companies still raising gasoline prices while oil drops. That's the problem. And so we'll see what happens. Hope you got something out of it. I enjoyed the debate we saw yesterday. If you look in the comments in the video yesterday, I enjoy when people are debating. We come up with different things they think or whatever, and actually have facts behind it. It was really fun reading through the comments yesterday. So I appreciate everybody that actually put stuff down there and was respectful to each other. That is really nice to see. And so, anyway, because we have a mature community here, so it actually helps out to have that. So anyway, I hope you guys got some out of it. Hit the like, subscribe button if you did, and I'll end up seeing you tomorrow.